Hello, everyone, and welcome back to the main stage here at Lending 3.0. And we are going to talk about mortgages, which is probably some of our favorite lending product. It's been around for quite some time. We've got a great panel here for you today. So we have Vicki Harris of Kensington Mortgages, Alex Beavis of Skipton Building Society, and Stephen Brown of Scottish Building Society. So we're going to talk about all things mortgages, house lending, and where that industry is going, especially in terms of digital and innovation. So first off, I'm going to ask a bit of a question because I think more than any other lending product, the mortgage product brings up a lot of personal emotions for people. So I'm just going to assume, is everyone here a homeowner? Just wave. We're all homeowners. Any renters? Okay, so I'm going to start off with the first question. And Vicki, I'll start with you. When did you purchase your first home? And this is an experience that you look back at fondly.
So I bought my first home about 20 years ago. And no, it wasn't a very good experience. I don't think that the mortgage industry is very good at making the process simple. I think, the fundamentals of a loan are what they are, but the process by which you keep the customer informed and make sure the customer understands what's happening and where they are in that process, I think we as an industry are lacking a bit, to be fair.
Interesting. So yeah, I'm going to go on to Alex now. So Alex, when did you first purchase your first home, and what are your fond, if fond, memories of that?
The only fond memory I think is actually getting the keys. The process was pretty poor. So first time buyers in 2014, me and my partner had saved up. We'd been in transition from the private rented sector into mortgage home ownership. And we'd found a flat that we wanted to buy, had an offer accepted, served notice on our to our landlord in our private rented flat, moved out temporarily into a very accommodating mother-in-law home for what we thought would be a couple of weeks pending our completion. It fell through, and 9 months later we found a different property, and that one was much more smooth. But having worked in the industry, my own personal experiences have generally been quite poor, even the subsequent moves I've made. So it's something I'm quite passionate about in terms of how can we make this a much more customer-friendly journey.
Excellent. So Stephen, I'm going over to you now. When did you first purchase your first home?
Yeah, I bought my first property in the early noughties, so pretty modest one-bed flat, and I think the actual experience of living there was great. I really enjoyed it. The purchase was disastrous because during the process of buying it, my solicitor discovered some kind of exotic wood-boring creature inhabited the flat, and that caused all sorts of trauma for him during the purchase. And in the process of selling it, I actually lost money. So what was actually a very enjoyable flat to live in was sort of bookended by quite a poor purchase, and then probably one of the few people in the country to have actually lost money in a property in recent times when I sold it. So yeah, it was an interesting experience.
So for full disclosure, my husband and I bought our first home, a 2-bedroom flat in Shoreditch in 1999, and I'm not going to say how much we paid for it because I think anyone under the age of 40 will probably have a heart attack. But let's just say we kind of wish we had held on to it, which we didn't, for what it's worth now with the London property market. So I guess that really brings me to my next question. And Stephen, I'll probably stay with you since you had the last word. I think we've kind of alluded to this with our opening question. Is the traditional mortgage product still fit for purpose at all? So Stephen, I'll stay with you.
Yeah, I think I would say we're stuck with the mortgage. So if you look at the mortgage in its simplest form, it's really just money. And I've heard someone far smarter than me say that money is really just a database for labour allocation. So I think if you stick with that database theme, if there's any kind of disparity at all between the value attached to short-term labour and the value attached to home ownership, then there'll need to be some form of financial instrument that sits in between those two to fund the acquisition of a property. So I think we're stuck with the mortgage. I think this will fundamentally be the last decade that we do the mortgage in the way that we do it just now. And I think there's almost a brute force attack on re-engineering the mortgage from a number of different angles at the moment. Some of that's coming from the government, some of that is coming from traditional banks and building societies, but an enormous amount of that is coming from the fintech sector. And I think that's probably where we'll see some of the most exciting advancements.
So wow, another decade of mortgages. So I guess that leads me. I need to go on to Vicki now about whether what do you think about the current state of the mortgage product, and is it still fit for purpose?
Yeah, so I tend to agree with with what's just been said. I think that the mortgage itself as a loan is probably here to stay, but I think the process and the customer journey. Certainly there is massive room for improvement, and the advent of some of the new digital technologies is going to support that. And then I think there are other things around the loan product itself that will probably evolve. I suspect over the next, 5 to 10 years, we'll see more sort of flexibility around payment. Do you have to pay 12 monthly installments every year? Actually, could you be more flexible around that and take payment holidays and then overpay? Perhaps a bit more flexibility around that. I hope we'll see more flexibility around portability of mortgages. Could you get a mortgage for life and it changes? Its characteristics change over time as you move into different phases of your life. But fundamentally, the mortgage as a loan, I think, won't change. I think it's around the edges. I think it's the customer journey to get there, and some of the ways in which it can be made a bit more flexible are the things that we really will see some change over the next sort of 5 to 10 years.
So, I mean, I'm hoping maybe I can stay with you, Vicki, for a follow-up question then. You talked a little bit about flexibility, and I wanted to get into more issues about sort of tailoring and personalizing that process. How is that achievable?
So I think, people do have different phases in their life. A first-time buyer is in a very different position. A first-time buyer who maybe is relatively young, new to their career, maybe doesn't yet have a family, is in a very different position than maybe someone sort of 10 years later who has a more established career. Their salary is more, it is a bit higher. They may or may not have a family or live in an entity with more people at that point. So I think, this concept of portability and the mortgage growing and changing with you, or allowing you to make various changes in your life, such as, I now want to go around the world for a year. Well, how on earth can we accommodate that? Can I have a 12-month payment holiday? So I do see people's lives change. People's lives change with the passage of time as they get older, but people's lives are also changing with how they want to live their lives. And I think allowing that flexibility within the mortgage, it's not an easy thing to solve. I don't think we have the answers yet, but I do think that will be cracked over the next sort of, 5 years, 10 years. Digital technology is going to be a big aid into solving some of that.
So we got 5 and 10 years. So Alex, I'll move over to you. We've heard this is the last decade of the current mortgage product. Vicki's talked about, move towards more flexibility. What do you think of the current mortgage product? Is it still fit for purpose?
I think that will depend on whether a really deep-rooted societal norm persists. So in this country, people are obsessed with home ownership in a way that probably outstrips just about anywhere else in the world. And the mortgage is a byproduct of that, because it's a financial means of facilitating owning, the bricks and mortar in which you live. My personal view is that is going to take a really long time to change. Although I do think we are starting to see some signs of particularly the younger generation just viewing home ownership as a completely unrealistic ambition, particularly people that live in London and the South East, because of the mismatch that we've seen between wage growth and where house prices have gone. And that's kind of understandable. The mortgage product itself, as kind of already been mentioned, I think there's not a lot wrong with it. And that's probably why we've seen very little innovation in terms of mortgages over the last few years. A lot of it has been around the edges. The fundamentals are still the same. It's a loan secured on a property. Where there is a lot of scope to do better is how it's bought, how it's sold, the servicing, the packaging around the experience of what it means to get a mortgage and be a mortgage holder. I think the mortgage industry, by and large, is streets behind a lot of other financial products in terms of how that experience feels for customers and how easy it is to do. Though there's a lot of good green shoots of progress in that space. And I think maybe we'll come on to some of those.
Yeah, so I mean, I'll stay with you, Alex, for a follow-up question, because I know you mentioned young people, and especially in a country like the UK and London in the southeast, you know, like taking out a mortgage, affording a mortgage is just impossible for so many young people and for first-time buyers. But yet, you know, there's this still, I think, desire to be in your own home, to have a home at some point. So, you know, what are some of the things being done to address the needs of these first-time buyers, of these young home desirers, where that traditional mortgage might not be suited to them? Where are you seeing some of those green shoots?
I think first-time buyers, particularly as a result of COVID, have been hit relatively hard. So low deposit borrowing, so 95% mortgages, all but disappeared in the middle of last year, and there's been a relatively good recovery of 90% mortgages, but as yet no 95% lending in any real form. First-time buyers have also been historically supported by things like Help to Buy. Help to Buy changes, as people may know, from April. They'll still be able to benefit from that scheme, but there are things like regional price caps and restrictions that mean that both applicants have to be a first-time buyer that will narrow the opportunities that are available. There are other things out there like shared ownership, which is I guess a fourth tenure of home ownership. So it's a bit of a hybrid between a mortgage and renting. Per my personal views, that's a really good product, but it's probably not that well understood by consumers. It's been something of the lesser cousin to the Help to Buy product, probably hasn't had as much attention from the government, mortgage lenders and house builders in terms of promoting that as a viable alternative. There are other government schemes coming on stream. So there's a kind of first home, starter home scheme, which has been a very long time coming, but I think we'll probably get a bit more traction this year, which is a discounted purchase scheme for first-time buyers. But the kind of structural issue that the first-time buyers face is really a lot of the schemes just address the symptoms. The actual root cause problem that we've got in the UK is that the one I mentioned earlier, that people's wages and the house prices just don't match up, and we have to try and find ever more ingenious ways of trying to bridge that gap between I can afford it and I've got a big enough deposit to get you on the housing ladder. And I think that is a much longer term, more difficult structural issue to solve. And there are some more innovative products out there, like really long-term mortgages, sort of more similar to a Scandinavian or the American model. But I think they'll take some time to embed in our culture. And would intermediaries sell them? Would banks be happy to sell them, etc.? So a lot of work to do, but there's a lot of intent, at least from a government and societal level, to try and crack that structural problem.
Mm-hmm. So, in kind of keeping with the question we're talking with now, I'll go to Stephen for a follow-up question. I mean, Vicki talked a bit about flexibility. Alex talked about the green shoots and different functions for first-time buyers and people who don't whose income doesn't match the high prices of houses, especially in a city like London. You earlier had mentioned new fintech entrants to this space. So, Stephen, what are some of the, I'm going to use that term again, green shoots? What are some of the changes that you're seeing coming forward?
I think if I put a slightly Scottish slant on it, so we have the First Home Fund in Scotland. So last year, the government allocated over 100 million to the First Home Fund, which is a scheme designed to help first-time buyers get onto the property ladder. That relaunches in April, and the 1st of April, and there's 60 million attached to it this year. So I think that exercise did two things. So the first thing is it exposed the extent to which we need better innovation to assist first-time buyers. The scheme was hugely oversubscribed. It overshot by some margin, and there's an expectation that will happen again this year. So there's clearly a huge demand among first-time buyers. The second thing it did is it brought the government onto the field of play. So the government, if I use a football analogy, it should be maybe construed that they set the rules and they are the referee, but they maybe shouldn't necessarily be a player on the field, and that can sometimes stifle innovation. So I think potentially the government should incentivise the outcome, which is the innovation to help first-time buyers, rather than attach a sticking plaster problem, albeit the First Home Fund was a very welcome relief for some first-time buyers, but it won't help everyone. So I think, just to come back to Alex's point, and I think it's a great one, we definitely need more innovation in that space, because there are a lot of first-time buyers out there who definitely do want to get onto the property ladder.
So cool. I'm going to move on to my next question, and Stephen, I'm going to stay with you for the next question. Recently, KPMG did a study, and I was kind of intrigued with some of the findings of this. They basically surveyed the mortgage market in Canada, the UK, and Australia, and respondents listed a lot of priorities. And one of the things that came up was issue resolution and empathy, listed very high as a priority for mortgage holders, but yet those were the ones that had the largest gap between expectation and reality. And I know we're here talking about technology and innovation and digital process, but I really wanted to talk about that empathy element. And Stephen, probably the reason why I'm sticking with you is I know for those of people who don't know, Scotland does work with a little bit of the closed bid system. Of course, buying a house is an emotional experience. How do you keep that emotional, how do you embed consideration for the emotional well-being of your mortgage clients into that mortgage process? Is that possible?
I think it is. I think there's a push and there's a pull aspect to this in my mind. So the push aspect is that we don't want the process of buying a home to distress our home movers. And actually, people, when they get in the door, they're quite distressed by it, and it would put them off moving again. So I think speed and efficiency is one part of that, but it is only one part. And the pull aspect of it relates to the customer service ethos that we provide. So, I think at the moment you can create a marketing algorithm at the moment which will monitor your movements online and show your predilection for either a diet beverage or a full fat beverage. And I think we're a long way away from having that algorithm when it comes to mortgages, because it is still quite a complex product. So I think the pull aspect of my answer is in relation to good quality people within our industry who provide high quality advice at every step of the way. There's still going to be a requirement for a person to be involved to support the house buying process. So yeah, I think there is a clear sort of push and a pull in that respect.
So yes, I'll move on to Vicki now. I mean, is it possible to include empathy in that product roadmap for mortgage innovation?
Yeah, no, I think it's a really good question. When you think about the way most lenders have set up their processes today, a whole bunch of information is gathered, and there are either various sort of algorithms and a bunch of underwriters who are looking at that, and they are not generally sort of trained in talking to the customer and explaining to the customer what's happened. And then the second phase, even once the mortgage lender has put out an offer to the customer, there's then a whole set of other people who need to get involved in the process to make it happen, whether that's a solicitor or a conveyancer or a local authority search, or and that part of the process is very fragmented with a lot of different players, and frankly no one really controls that process, and I think until we have some way of managing that process so everyone can see where everyone else is in the journey, and whether that's some sort of digital conveyancing solution that allows all parties to see where all other parties are in their bit of the process, I think it's really difficult. And I know there are fintechs working on that, on building those types of platforms. It's going to take a long time because it is so fragmented. How many conveyancers are in the country, how many different local authority searches, local authorities are, that it's a lot of different players that would all need to be corralled and use, one or two platforms, and land registry gets involved as well. So, you can see how it might get solved, but I think it's going to take a long time. It's not something that can happen overnight. But I think when we do get there and everybody has full visibility of what's happening, it should then facilitate that process to allow people to be more empathetic.
Interesting. Yeah, you bring up some really great points, and points that have been talked about at other events at FinTech Talents. This idea about, is empathy a customer service, or is it something that can be digitized and repeated and sort of embedded into the process? So I'll go to Alex here. I mean, where do you see this? Is empathy something that Skipton is offering as better customer service, or do you see a way forward that this can be solved by innovation and digital process?
Well, I don't think those two things are mutually exclusive. So we actually have a customer empathy team as part of our broader customer experience team at Skipton. And actually what they do is quite simple. So to be empathetic is to be human. And really what we're talking about when we talk about empathy is showing the customer that you understand how they feel and reflecting the experience that they have based on your understanding of what it's like to be them and what their needs are. So what we've tried to do is start with some of the simple things, which are things like how you communicate to a customer and when, and the language you use. So the way you would talk to a first-time buyer is very different to how you talk to, say, a portfolio landlord who might have 10 mortgages on 10 different properties and had been very experienced mortgage holder. So at its very highest level, that's really simple versions of empathy. But what I don't think is necessarily true is that to be empathetic, it has to be a human-led interaction. I think we can embed empathy and that human touch within our digital processes, and some of the fintechs that out there are very good at doing this. And that is where I think that sweet spot between a purely human, really quite expensive journey that has lots of manual intervention and lots of human touch points versus a purely digital computer says yes. I think that kind of dichotomy is a false one, and actually those people that are doing this right are somewhere in the middle, and actually you want to be guided by what your customer wants. So some customers will be quite happy with a box ticking computer says yes exercise, and some would want their hand holding the whole way, and it's not for us to dictate to the customer how the experience should work. We should be led the other way around.
So maybe I can stay with you, because we're moving on to the next question, which is more of a technical question, and it's kind of digitizing that process. I mean, anyone who's bought a home knows that there's a lot of paperwork. You have to, you visit the estate agent and solicitor, and you have to visit the branch to sign papers. What is that digitizing that process look like? Are we going to completely get rid of the branch visits? So Alex, I'll stay with you for that one.
I think so. I think this is one where I could be a little bit more confident with my predictions. I think the digitization agenda in mortgages has been on the table for a while, but progress, I think, today has been relatively slow. I think COVID has changed that, and I think a lot of lenders who didn't have digitizing the mortgage process high up on their agenda will have moved it up closer to the top just out of sheer necessity. And those that already had established quite well progressed digitizations of their mortgage back office and mortgage onboarding experience would have done well and potentially done better than other lenders through the COVID experience, where the kind of human face-to-face interactions couldn't happen. I think Skipton, we are probably in that latter category. We've been kind of 3 years into looking at how we digitize our whole mortgage process. Really taking a lot of the non-value human activity away and relying on data and APIs to deliver the parts of the mortgage process that are essential, but that customers don't necessarily need to have any involvement with at all. And when you add those building blocks together, what you get is a much slicker, much quicker, and a much more certain process for customers. So I think one of the real issues with the current mortgage process is just how long that period of uncertainty lasts. And I think it comes back to the previous point we made. People don't really want a mortgage, do they? They want the security of, I've got this home that I've been emotionally invested in. And under the old mortgage process, there's quite a long window of, sending your docs and waiting for them to be approved and waiting for the underwriter to say yes and then getting that offer. What the technology does is condense that window into a much, much shorter period, bringing forward that kind of moment of truth for customers much, much earlier in the process, which is a really good win, I think.
So a bit of a follow-up question in sort of streamlining that process, shortening the timescales, does that innovation process butt up against regulatory concerns at any time right at the moment?
Sometimes, and I think where we've got to as a lender is our ability to process mortgages quickly largely becomes a risk appetite discussion. So things around your willingness to use automated valuation models, your willingness to use like automatic income verification straight from the credit bureau. Every lender will have their own risk appetite and risk approach to those things. And I think confidence with that will grow as it's used more often. These things become more predominant means of assessing someone's creditworthiness and mortgage affordability. And everyone will adopt that at a slightly different pace, from lenders that will insist on having a human tick off everything on the payslip and bank statement, to those that are happy that says if the computer model says yes, then you're in. And everyone is somewhere on that spectrum, and that will depend on their own approach to risk.
Yeah, so I'll move on to Stephen for his comment on this. What does that streamlined, digitized process look like? Can you spell it out for us?
I think it's faster for a start, so I think speed does play a part in it. I think it should be inclusive, and I think that's a critical point. So what tends to happen, drive complexity into the marketplace, you tend to need more human intervention, and we've seen that in the past with brokers stepping up at various times to support complexity being driven into the marketplace. So I think it is absolutely imperative that we innovate, but I think we need to make sure that we include everyone on that journey. So we shouldn't innovate just for customers who have vanilla circumstances. That should be inclusive to bring in every type of customer cohort. And I think whatever that digital innovation looks like, it should be built around that rather than just serving a smaller number of customers. There will inevitably still be people who perhaps don't want to go down a digital route, and there will be generations who aren't familiar with the smartphone and technology. Perhaps the sort of 50 to 60 plus, and there will obviously still be a segment there who just don't want to go down that route. So we'll have to build a sort of separate, if you like, a separate process for them. But I think the buzz expression for me would be probably inclusion. Whatever we do, I think we need to make sure that we include all cohorts on that roadmap.
I'm glad you brought that up. I think that perfect banking customer that has all the deposits, and I don't think that customer actually exists in real life. Human beings are much more complicated. So Vicki, I'll move over to you. Yeah. Oh no, go on. Yeah, continue.
No, I was going to say there's an old computing adage as well, which is GIGO, garbage in, garbage out. So customers will inevitably need a degree of education with what they are inputting as well, and that will also need to form part of that roadmap. Sorry to cut across you there, Liz.
No, it's absolutely fine. Yeah, we're having a discussion here. So I know it's hard with virtual. This is the new world, I'll call on people, but yeah, no problem at all. Wanting to have further comment. So, but I'll go on to Vicki now to get a viewpoint from your point of view on what that digitized process should look like.
Yeah, no, I mean, I tend to agree with what's been said. I think there are bits of the process that maybe don't have that much value added that can be digitized, will speed things up, will make things both easier for the customer in terms of, there are less pieces of paper that they need to assemble and, take to their broker or take to their lender. But it also makes some of that will make it a lot easier for the lender to automate some of the processes that they have to do. So it's sort of a win-win on both sides. I do think we need to, take account that some customers won't want that level of digitization. They won't feel comfortable with it. Some people will feel more comfortable more quickly with it. How to open banking to the extent it requires people to give out their passwords to third parties. They might not want to do that just yet. And I think that will take longer in some sort of cohorts of people than it will others. But I think, overall, the trend is clearly that it will have to get more digital, and it will do so. So I think the onus really is on the industry to move forward. I think COVID has helped because it has forced us all to reflect on where we are digitally, and I think that's a positive. but it is a complicated process with a lot of different people in, and I do think that's going to take time to work its way through. And I think that, although I completely agree on the inclusion point, I just think we will find the simple vanilla mortgages will get more digitized more quickly because it is easier to digitize them. But that doesn't mean that the more complicated cases shouldn't also get the same attention, but it's just going to take a bit longer, I think.
So Vicki, I'm going to stay with you because you mentioned COVID, which is our next question. I think everyone everywhere is looking for a time where we don't talk about the pandemic in COVID-19, but we still have to right at the moment. So I wanted to look at how COVID and the global pandemic has been affecting this market. Many people in financial services have talked about that certain innovations have been accelerated. It's almost been a silver lining. Other sessions at Lending 3.0 have talked about this so-called silver lining for the lending the lending sector. So Vicki, I mean, has there been, has there been an increase of people selling and moving houses because of the pandemic? Has there been a sort of an acceleration of that flexibility that you talked about? How has the pandemic affected this sector?
Yeah, so I think two things. First of all, let's look at first of all sort of how it's affected our existing customers or existing mortgage holders, and then secondly, let's come back to sort of new business for individual lenders. So I think for existing customers, obviously, the really big thing that happened at the start of the pandemic was the announcement by the government that people should be able to get a payment holiday. And I think that was the right move. I think, a lot of people were very worried at the time. And I think it, provided some comfort to a lot of people out there. I think, what we saw was lenders were completely inundated. Back in March and April last year, no one knew how this was going to play out. So, I think probably more people applied for payment holidays than actually needed them. But, if that was the way to get more comfort across the UK population, then I think that, that was probably a trade-off worth having. But what that did do, certainly with us and talking to colleagues in some of our competitors, I think it forced us to get digital very quickly. There was no way we were going to be able to deal with that many inquiries through phone calls and letters. We had to put in place some digital customer journeys very quickly, which we did and which then worked and which we are now using going forward for some of the sort of ongoing things that we need to do with customers. So I think to that extent, it was a real positive and has pushed the industry forward. I think in terms of new customers, what has COVID done? So it's clearly, the industry has seen unprecedented levels of people wanting to move house over the past sort of 6 months. Some of that is the stamp, some of that is COVID. They've been stuck in the same home with, 3 kids trying to do homeschooling with, a nightmare.
I'm already planning my summer holiday. 2022.
So I think there's a lot of people who have thought, maybe I need some more space. I'm likely to work from home more often going forward than I have historically. I need more space. Whether that necessarily means they want to move out from the cities into the countryside, or whether they just want somewhere bigger in the cities, I think, I've seen some data that suggests it's not all about moving out of cities. It might just be trying to upsize within cities. But I think the other thing we need to factor into what we've seen in terms of these huge levels of demand over the 6 months is the stamp duty holiday. And that has had a massive impact, and how much of what we've seen is due to pent up demand or people changing their views about where they want to live because of COVID versus the stamp duty holiday. I think the two are fed off each other. So, we'll see how that plays out. But certainly it has led to people rethinking what type of house do I want to live in and where do I want to live, and that has led to a lot more demand, which we will see going forward, I think.
Yeah, interesting. So I'll move over to Stephen now. What is your take on how the global pandemic has affected this sector?
Yeah, I think if we look at the sort of peregrination out of the cities and people moving to either larger properties or that appetite to live rurally, I think we might see a bit of a bell curve on that. As the side effects of COVID start to dissipate, we may see that appetite start to to wane a little bit. But I think what would potentially mean that people would want to live rurally more longer term is the way that we are working at the moment. So if there is no need to be geographically based in one particular location, then it may be that we do see a longer term trend to move away from urban areas. There could be an unintended consequence of that, or potential positive, which may mean that those markets become more accessible for first time buyers. That may be a side effect of that in the medium to longer term. But I sort of have a feeling with the property market and COVID, I think that will start to come down the other side of that bell curve as we start to see the effects of COVID dissipate.
Yeah, no, I tend to agree. I think this, people selling their 2-bedroom central London flat for a mansion somewhere in North Yorkshire, I think those are anecdotal and not an upward trend. So I'll go to Alex now. What have you seen over the past year, and how the pandemic has kind of affected this sector?
I think you've had 2 good answers already. Just adding to the payment holidays one, just to kind of an anecdote really, and one that shows the importance of tech. So in any normal month, we would deal with probably tens of payment holidays. Following the announcement that payment holidays were widely available, and it was kind of their provision was mandatory, we went in 1 month from tens to tens of thousands. And servicing that kind of level of demand would only have been possible with a digital solution. And we were very quick to develop one that captured those payment holiday requirements online and processed them. Otherwise, we would have been overwhelmed and probably still dealing with them now. So that's, I think if this would have been 10 years ago, it would have caused lenders a very, very big headache. We got to the point in the UK where 1 in 5 mortgage holders were on a mortgage payment holiday, which is quite an astonishing stat. The data suggests now that most of those have been repaid. I know the scheme's been extended, but actually the new levels of mortgage payment deferrals that we're seeing, they're called deferrals now, not holidays, by the way, is relatively low, which is a good sign of the underlying health of the economy. I agree with everything that's been said about the kind of demographic shifts. I think we've also seen some of that. So asking prices for flats with no gardens, are going down. Asking prices for houses that are a bit more suburban with more garden space and an office are going up. And I think some of that is likely to be temporary, but instinct says some of that might persist a bit longer. The thing that hasn't been mentioned yet is the grey cloud on the horizon is that the wider economic effects of COVID are largely still unknown. So the more longer term impact on unemployment and potentially house prices, mainly because the impacts on both of those variables have been masked by government support for the economy. So stamp duty, as Vicki said, has created an artificial rush for houses, and that has kept prices high. Unemployment has been propped up by things like the furlough scheme and support for self-employed businesses, and all the other government grants that have come with the kind of COVID fiscal stimulation packages. What happens when they disappear to things like mortgage arrears, and whether there are some people whose jobs just aren't there post-COVID, I think we're still yet to see. Data, I think, is encouraging, and I think the government have ploughed a lot of money and time into the economy, and they seem quite determined to see it through to the other side, which I think will reduce the worst of the impacts of COVID on the mortgage market. But undoubtedly, there may yet still be some pockets of it, particularly actually less affluent customers who are more reliant on things in jobs, lower paid jobs in hospitality or service sectors. They might still yet feel the effects of it, even when we're out the other side. But don't want to end on a slightly negative note there, but I think that we're not quite out of the woods, and there are still impacts of COVID to be seen.
Yeah, no, I agree. I think some of the economic impacts are yet to be seen. I think I saw a tweet the other day, and I know it's a U.S. data, but I think there are more adult children living with their parents in the U.S. than since the Great Depression. So I'll double check that stat so I can tweet whether or not I'm right or wrong. So we're not going to end on a we've got about 10 more minutes left in our discussion. We're going to see if we can end on on a crystal ball note, maybe a hopeful note, some of you have mentioned during the discussion that we're in the last 10 years of that traditional mortgage. And of course, the mortgage product is the product many of us use to buy our home, the homes that we live in. So I really wanted to ask you to look forward to past those 10 years, 20 years, 30 years, in how we are going to, how will we own homes in the future? How will financial services kind of support that? What will that mortgage, if it's even a mortgage, be called or look like? So this is future looking. So no one will be around if you're wrong, if you talk about what it will look like 50 years from now. So Vicki, why don't I start with you? What will that look like in the far future?
Yeah, gosh, that's a difficult one. I'll just throw out some ideas out there. I mean, who knows how it'll end up, but I suspect, there's a lot of talk at the moment about fintech and embedded finance, and that actually companies that are involved in all sorts of sectors other than finance can start to sort of offer financial products with the core offering that they offer. So I suspect let's throw out there that might happen with mortgages. I'm not whether Tesco's will be selling more. Well, Tesco's does have a bank. That's probably a bad example, but I don't know whether BA. I don't know. British Airways. Can you go and get a mortgage from British Airways? Probably not. But I do think that the concept of, do you have to go to a traditional bank for a building society for a mortgage? Probably not. I think we'll see distribution coming through all sorts of different avenues that we haven't even thought yet. I mean, definitely through some of the sort of price comparison website, but also through maybe some other types of retailers or other companies that have access to customer bases who need mortgages. So I guess that's one. Distribution will probably change. I think as people get more financially savvy, and I hope that people do get more financially savvy. The government you hear talk in the government about, should financial services and managing your money be part of the national curriculum? And I think it probably should, because I think as a population we have pretty poor understanding of what the impact of financial decisions. So if you start to assume that we as a population are better educated financially, does that mean there's less of a need for advice with mortgages? So I don't know. I'm throwing something out there. What's the role of the broker going forward? I've no idea, but I think the advice model will probably change. I think, as we've said before, the fundamental mortgage, the idea of being a loan over a period of time that has to get repaid, I don't see us moving from that if people want home ownership. But having flexibility around that loan as to how long it takes you to repay it, whether you can have holidays from repaying it, whether you can very easily take it with you when you move from one property to another, all of which there are bits of those in the market today, but they're certainly not standard. I do think we'll see a lot more around that. They're probably my high level thoughts.
No, excellent. I'm glad you said embedded finance. I had this thought of sort of point of sale mortgages. You walk into a house, press a button on your phone, and 5 minutes later you own it. So I'll move on to Stephen now. What is this going to look like? How are we going to own our own homes 20, 30, 50 years from now?
Yeah, I mean, I hope we do own our own homes, and I hope that, it's like home ownership provides a lot of financial security, particularly in your twilight years, because you're going to have to pay to live in an abode either way. So it would be good that it was yours and you owned it outright and you had that ability. So I hope it doesn't become the, preserve of the rich, for want of a better expression, or the wealthy. I think how we fund it might change. So traditionally at the moment, banks and building societies provide the pool of funding for home acquisition. That might move. There's a lot of money sits within pension funds. There's also an enormous pool of locked up equity within the UK housing market at the moment, properties that don't have any encumbrance on them. And I think the thing that I would love to see is innovation in that sense. Because the way that and it's a point that Alex made earlier on, it's a really good one. It's like the way that we sort of build a mortgage product is very similar. We all do it in a very similar way. can we start to break new ground on that? Can we bring the regulator with us in terms of the way that we build a mortgage product? And I think we have to bring everyone along to truly build something innovative. So in terms of how we fund it and how the product looks. But yeah, I think that they are probably the kind of key points in making something which is cool and a bit funky and something that's different. We've not had anyone who's created a truly tribal following in that space. So there are other areas, Apple, Tesla, these are businesses that they create a tribal following, they build something really cool. And it's almost like preparing customers to borrow, I think, is the critical thing, and creating that tribal borrowing. And to your point there, Liz, it may be that we get to a point where you walk into a home and based on distributed ledger technology, you can just click a button and the asset class moves from one place to another, and that's it, job done. You know, that could happen.
Interesting. Yeah, I would love to come home and tell my husband that I bought a house today. We're moving. So, Alex, we'll get to the end. We'll have you close us out on our discussion. What is your crystal ball say? What does the sector look like 20, 30, 50 years from now?
I think a solid prediction is that mortgages will become much more personalised to the individual borrower. So typically, your typical mortgage is an off-the-shelf product. So the same 90% mortgage goes to all customers at the same pay rate. I think the advent of open banking and big data means that that product can be highly personalised to that borrower and potentially change over time as that customer's circumstances change. So as they earn more, or as their family composition changes, or their credit rating changes, that mortgage can almost be dynamic and move with them through their life stage, depending on what they need. So rather than have to remortgage, they might be able to just draw down additional funds to do home improvements. And that could be almost available on tap because the banks have a much better understanding of who they are and what risk they pose. So I think that's definitely coming. The other angle is just a much higher level of commoditization of the mortgage product. I think it's seen that something people do rarely, they rarely think about it. And when they do, they tend to go to get formal advice because they're very uncomfortable. I think people will become much more comfortable with switching their mortgage in the way that they switch their energy supplier. And they'll do that online at a click of a button, and there'll be services there that help them do that. And the way that mortgage advice is sought for and consumed will be much easier, much more digital. And that mortgages won't be seen as such a big life event in the way that it is now, because a lot of the complexity will be stripped away. And I think all of that could be quite possible.
Interesting. Yeah. No, this has been a great discussion. I mean, buying a house, not the biggest life event that it is right now. I mean, I think probably for most of us, it's the largest purchase we'll ever make in our lives, a single purchase. But no, thank you so much for this discussion, Vicki, Alex, and Stephen. Really enjoyed it. Stay on the main stage for more great content from Lending 3.0. I want to thank my panel and thank you all. Goodbye.